Hello, my dear precious metals friends. Hope you are doing well, guys. It's been quite some while since we did the last video, and the reason being is because we have been working on our amazing Odin framework. It is a framework of indicators for retail traders. I have made a big analysis to this today on the BTC pair, but I'm gonna explain it to you as well in this video. It is, to my knowledge, okay, to my knowledge, it is actually the first real indicator on TradingView which comes from the institutional space. So my friend and colleague that I have got to learn this year, uh, Charles, but his nickname is Yves. Yves has been working on this for 3 years. He has actually licensed the same strategy, okay, that I'm going to show you today now. He has licensed the same strategy to two hedge funds already, which are paying $24,000 each per month in order to use the strategy. And what he has done now in the last 3 months is basically he worked on that automation to bring it on to TradingView into a manual trading environment where you can basically see the same logic, okay, with quite a few indicators. So it's a multiple of indicators, but I'm going to, it's going to suffice to basically bring it down to the necessary ones. I'm going to show you how magical this is. So the indicator itself, this is very important for you, my friends, to understand. The indicator itself has a positive expectancy, okay? And this is big because no one else, as far as I am aware, on TradingView at least, has an indicator with a positive expectancy. When you go around, okay, when you look at the indicators, they will be mostly a derivative of the MACD, so they will be coming based off on the MACD. They will be some RSI, whatever. Like they have just repainted it and brought their name underneath. But not so with Odin, because Odin actually, what looks like here, Bollinger Bands. Okay, let me show you. Yeah, the calculation is not coming through here, but here we have it on Wanda. So what looks like Bollinger Bands, my dear friends, is not the case. Okay, it is much more complex than that. So whereas Bollinger is measuring the deviation, basically the standard deviation of the price from the simple moving average, the volatility bands are a real institutional measurement. They are measuring the VWAP, so basically the standard deviation with the VWAP, but also they are making internal calculations on mass and energy in the market. So they are measuring, okay, are we basically in the central zone? Are we surpassing it? And if we do, whenever we touch the outer bands, this will mean mean reversion. Okay, so this will automatically lead to mean reversion, where we will come back to the central zone and touch the yellow line yet again. This is a concept of also another indicator where we have current. It is called current. It measures the it's similar to the RSI, but of course the RSI is very, very simple. It becomes overbought, oversold. But here we have actually always extreme situations. So it's measuring extreme situations in the marketplace where it cannot go any higher as long as we are basically still grinding in that range. And what we then have as a result of both of them, when they change their areas, we will get green or red dots. Okay, so it's basically measuring mass energy, the VWAP, the volume weighted average price, and all in conjunction, and how the price then can move based off on those, which leads to you basically getting almost all the moves. Okay, so um, if we were to, and I want to show this to you extra for you, my dear friends, if we go to the hourly chart, I want to show you how you would have fared if you had no idea what you're doing, like you literally had no idea in technical analysis, you didn't know anything what is going on inside the chart, and how you still would have fared. Basically, since the break, okay, I mean, we can literally go back here up until, as you can see here, okay, up until the break that happened in basically in May, end of May, and then we came above higher and we broke the important SNR zone. But before that, we had this nice, you might remember this wedge going down. So let's have a look at what would have happened if we just traded it according to Runar. Okay, Runar giving us the signals here with green and red. Okay, so we come to the end. I just want to show this to you because here you can now see how predictive it works. So in contrast to the MACD, which we have to the bottom here, it is not crossing over when the once the price, only once the price moves, but it will always show you before that. So essentially, we have the bull move upcoming. Okay, so we get into the trade here. We can perfectly see. Okay, we have the green dot. We are bullish. Okay, we are trading this bullish all the way up. Have a look at this. So as you can see, we are green, green, green. This is literally what it means. It means you're good to go. Okay. Look at the MACD at the same time. We're crossing up and down, up and down, up and down. Would you have traded according to the MACD? You would have gotten literally into a roller coaster, literally in a roller coaster of probably 10 trades here. Whereas the Runar tells you, okay, my man, we are at 1275, go long, okay? Go long, and you are long, you are long, you are long. Have a look at this up until when? We get our first red dot, okay? We get the first red dot. Literally, once we have long surpassed 1380, we are at 14, as we can see here, 1412. Beautiful. How much profit was that? Okay. Just by going long here, we took 11% without, just the price movement, okay? Without any CFD trading leverage whatsoever. 11% of the price. So not counting the pips here, okay? Have a look at how magnificent this is. And another very, very nice thing, you might think that, for example, as we can see with the MACD, of course, MACD crosses down because the price crosses down here. Not so with Runar, again, because it is predictive, okay? It predicts already what the market sentiment is. So we are turning red here, as you can see. While we are still basically inside the zone, we are turning red. So that means we are going short. And then the big drop comes, which is beautiful. It measures up until here. Okay, we could have taken profit underneath. But just for the sake of the argument, we're always going to trade what it tells us. Okay, so 1939 here. We're going long. Have a look at this. We're going long all the way. Okay, all the way up until this solid 1%. All right, beautiful. It tells us to short, and we get still nice profit here. Usual from asset price movements, for example, in crypto space. What you will get in the worst case, okay, will be break evens or maximum 1 to 2%, off, especially in the crypto asset. But we're gonna see live now, okay? So, so this is the worst case, okay? Your worst case, you will basically get kicked out as soon as possible. So just have a look at this now. Before the run happens, okay? Before the run happens. We are here. This is our candle. And here we go. Okay? Beautiful. All right. Here it basically stayed up until we could have taken much, much higher profit, but nonetheless, it's okay. Okay? It's perfectly fine. We're taking profit at 126. And we are going short up until, there we go. Okay? Almost break even, but it's still fine. It's still fine. We are basically longing here, and we are basically getting, so either here or we had a small loss here, as you can see. So either it was break even or we got stopped out, let's say in the middle of the candle. We had around 0.30%, okay? So completely honestly here to see what else it does. Okay, it tells us to short. It's coming back up again, okay? Coming back up again. We are still maybe slightly in a plus, but it's almost break even. All right. We are going long. We are going long. Have a look. Before the drop comes, don't forget, before the drop comes, solid 0.56. It tells us to short, okay? Now, it tells us to short, okay, okay. We get basically this candle, okay, in the middle. We have a loss of 0.77, okay, very, very clear. By the way, always, this is the weakness of it. So when we get a V-shaped recovery, okay, this is always the problem. So you get like, you should immediately back up. You will either get break even or a small loss always in that case. So okay, now it starts. Have a look at this. We have been here. This is the hourly on August 1st. We had been at 14, okay? 14.35, as you can see, my friends, 14.40. This is like before the run up here starts, okay? To 15. So the bulls are basically trying to get to the 2013 highs. We are going long, and have a look at this, okay? Have a look at this. We're going long up until this year, okay? So on up to the tops, it was almost 5% in the price move itself, but it's still solid 330.78 here. Beautiful profit, okay? Amazing profit. It tells us to short with that candle. Perfect. All right, we have a loss of around 0.50. And then it basically tells us to long here. We get up to the red candle and we get basically like in the middle, either in the middle stop that or let's say a little bit lower. So another break even one. We start to short here, okay, with this huge candle coming up, coming down. We start to short and we are around, I'd say, what is this? Yeah, it's a doji candle, around 35, like 0.35. We are in a loss, okay? So break even, loss 35. Don't forget before that, well above 3%, okay? So we are longing, okay? We are longing. Where are we? Red candle. There we go. Solid, as you can see, 0.6% profit. We are short, my dear friends. We're coming down. We're coming down. We could have closed much, much lower, but for the sake of the argument, it's 1.14% profit, okay? 1.14%. So it tells us to basically go long here, but of course we can immediately see it's a breakout trade. It's a break-even trade, and we're going long. So we're going long up, going short up until it basically came all the way up again, another break-even, and here we are long. Okay, we go long all the way up until, have a look. It's not before the drop happens, as always. It's before. Okay. It is before solid 2.85%. Okay, all right. Now where are we? This is almost now September, August breaking underneath. Okay, again, we could have taken profit much, much more underneath, but for the sake of the argument, we are here. Beautiful 0.7% profit. And let's have a look. It goes up all the way, okay, all the way up until the red candle here. Yeah, break even or maybe slight loss. Which is normally expected. Let me just zoom out a little bit to see this. We get beautiful and clear shorting here. I'm going to take the middle of the candle up until the end, solid 2.5%. Okay, so as you can see, okay, I could spin this game all the way. I mean, look at this, for example, another yet bigger move here, which we have beautifully, okay, beautifully. Have a look at this because this is very nice. Up until which point, okay? This is very, very nice. Up until which point we get the red dot. The red dot comes in here. It is exactly one candle before the drop happens. If you don't look closely, you don't see it, but the predictive power is just beautiful and amazing. It shows the market weakness already going on before. Sometimes you will even see it as like at the beginning, as you've seen, even 2 candles before, 3 candles before. So we will basically in a side range and will already tell you to go short. And this is exactly where the short happens, okay? I mean, it's just beautiful. The short goes on, of course, not up to the complete lows here, but still have a look. Even though we got this leg up again, we are still getting stopped out at 3% profit, which is perfect and beautiful. So I could literally, and this is where we are at currently, my dear friends. So this was the current price action. To basically zoom this out, let me show this to you. We had ongoing, We had the beautiful, as you might remember, okay, I can also show you still on the other chart here, it is beautiful head and shoulders, potential ongoing. And then the bulls were basically stalling here. I was telling you, okay, it could lead higher because we have been testing the region for quite a few times. Perfectly, we broke above higher. Have a look. The bears crash everything up, down again. So they don't see follow through. And if you have a head and shoulders potential and you don't see follow through, you always look for, a potential bull flag now going on. So in this case, of course, we have a very, very nice bull channel. Let me show this to you, okay, which is perfectly, have a look at this, to the upside, to the downside, how perfectly it gets respected. With the highs basically here, with the lows, another lower high, lower low, lower highs. So gold is inside that region. A break above 1522 will definitely tell us that we have the potential to go, to the previous highs, giving more than solid 2% here. And this is the range gold is in. But in any case, okay, we will see this coming, okay? So we will see this coming. Look, this was the last one, okay? Our last red dot, my dear friends, is coming in here. So we are short since, have a look. So we went up down to 1%, but we are still short and it will change. So once we get the bullish move ongoing, Runar will tell us that it's coming. And this is the magic of it, okay? So quite frankly, this is the beauty of it. I have shown it in crypto space also. For example, if we were to look here, I just did it with the XRP analysis before. What I personally played, my dear friends, was, for example, this equilibrium range, okay? So this is something I would have played anyways, okay? You see this? This beautiful tightening. So I played the breakout out of this tightening, beautiful equilibrium zone, okay? Complete price tightening. It breaks out. I would have played it anyways, but of course, getting the dot is more special, okay? It gives you the security, as you have seen in gold's case, that it indeed is coming. We are going up 10%, okay? So I would have played it anyways, but having the volume, the market, the volatility, the basically the VWAP measurement telling me, okay, you're on the good side, the potential is higher that we will go there, is the extra confirmation, which basically is just amazing, okay? So in my eyes, this is so crazy since it's out, okay? Since my dear colleague Yves has brought it out, I'm personally using it, obviously, for my own trading. It's literally killing it, okay? It is killing it on almost any trades that I would have done anyways. I'm much more secure. I know exactly, okay, if I do this, the potential will be, and so far it is seeing follow through one after the other. And as you have seen, my dear friends, it is working across sectors, okay? It works for commodities, it works for Forex, it works for stocks, it works for anything because all of them are measuring, have basically the same measures of the VWAP. They're measuring the same, okay? Institutionals are measuring the same. They are measuring movements based on the VWAP. How far have we diverged from that? What is the deviation? And then if we diverge from that, have a look at this, we will come back, okay? We diverge from this, from the blue zone, we will come back. This is always what is going on in the chart. And once you understand this, you get a completely different meaning of mean reversion. You understand, okay, this is now diverged. The potential is much, much higher that we come back here. So therefore, also your probability, of course, is higher, which you then can perfectly trade. This is exactly what Runar has been doing. On the 4 hourly, it also works. Like it works on the bigger time frames, on the smaller time frames also. But the hourly is literally the best without much noise, because the 5 minutes, the minutes will be much noisier. The hourly is literally so perfect, as you can see. So you will take almost all the volatility with you, okay? And that's the power of it. So, my dear friends, this is what we have been working on. This will come with a start fee of $500. It then will be a monthly subscription of $99. You can definitely test it for 7 days, okay? Completely without any attachment, 7 days for only $50. Just run it on yourself and see the magic happening in lifetime. See it for yourself that it is actually working out. And then you're very welcome to use it, to ditch it, whatever you want to do. It is an amazing system. And yeah, so basically that $99 monthly as a subscription is the model that we want to try out, versus $24,000, which hedge funds are paying. But we deeply care about the retail trading market. This is the reason why we have decided to go this route, to offer this to you guys, and to see how this is going to work out. So you will not just get the indicators in that subscription, but you will get also an amazing community of real traders. We are using this for our own trading. Okay, we are using it ourselves, and it is killer. And we are very, very welcomed if you wanna use this. So I say adios, amigos, and see you.